Central banks around the world are on the precipice of becoming bankrupt. In today's show, we're going to be looking at this. I'm going to be explaining what I mean when I say bankrupt, why the central banks can and will go bankrupt, and what does that even mean for the global financial system. So strap yourself in, because this one is a bombshell episode, and the ramifications of what is about to happen in central banking is going to be huge. In my opinion, they are setting us up for a mass financial crisis and impoverishment of the citizens. So let's get straight into it. I'm going to start with this article here from Bloomberg, and this one is titled, UK taxpayers take first ever loss from Bank of England QE holdings. Treasury has earmarked £11 billion to cover hit this year. So what the hell does that even mean? Well, the Bank of England has a mammoth amount of government bonds, and they took these bonds so that they could fund the government. So that's how it's meant to work. You're meant to have the central bank take the bonds and then give the government money that it can spend. And that's exactly what's been happening. And the government came up with all kinds of reasons to print those bonds, send them over and get a ton of cash. So we had Brexit, and then we had pandemic. And now, of course, we've got many other problems arising from things like energy crisis, migrant crisis. But there's one big problem. A lot of the bonds that the central bank hold are now negative yielding. They're not giving any income. In fact, the central bank is losing lots of money on those bonds. And that is, of course, because inflation is here. Now, interestingly, the British government have give indemnity to the central bank. So what that means is the British government will cover any losses on those bonds. And right now, those losses stand at 11 billion. That means the taxpayers of Great Britain are going to have to pay 11 billion to the central bank. So they're being robbed by the government and then by the central bank as well. This is really unheard of. This is extremely dangerous territory that we're now in. But it is not just the UK. Let's head over to Switzerland, and you can see here another article. The Swiss National Bank, $143 billion of losses in the first 9 months of the year. Again, this is of a huge magnitude. These are not small things that we're talking about here. And they reported a loss this year of 142.4 billion francs in the first 9 months, as turmoil in global currency markets took a toll on the value of their foreign exchange holdings. Now, I've spoke about all of these events recently, but in today's show, we're putting them all together to try and understand what the narrative is going to look like moving forwards. And you can see here, it says Monday's numbers put the SNB on course for the highest annual loss on record. Yes, the highest annual loss on record. While those results won't influence monetary policy, they still render it increasingly unlikely that the institution will be able to make a payout to the Swiss government and the cantons. So you can see the impact in Switzerland is quite different. The Swiss National Bank can no longer pay the government, and it cannot pay out all of the cantons. The cantons are essentially like the local councils. So again, it's going to have huge impacts on that country. And it says here, it would be only the second time in the central bank's more than 100-year history that it had to skip a payment. So when we're talking about these things today, I want you to just listen to the language that I'm using. Only the second time in history, the first time in history. These are all unprecedented events. And that means they're going to have unprecedented consequences. Because remember, it's not just one isolated central bank in crisis. We're talking about the whole global financial infrastructure that is about to come collapsing down. Let's move on. So that was the Swiss National Bank. European Central Bank warns of losses as it pays price for decades of money printing. The ECB warned on Tuesday it might make a loss as high inflation forces it to raise interest rates and foot the bill of a decade of aggressive money printing. Now, who's to blame here? Who's to blame? Who did all the QE? Who bailed out the banks? Who created a financial system that was so interdependent, that was so rotten and corrupt, that they filled full of derivatives? Who is responsible for that? Is it you and I? No, of course it's not. It's the central banks themselves. It's the crony capitalists. It's the corrupt politicians. And yet we are the ones that are going to be on the hook for what comes next. So I really want to get this through to you. You have to think something big is afoot. And if you haven't got prepared, now is the time. You're on the last chance saloon here. Having raised interest rates to fight runaway prices, the ECB must make huge interest payments to commercial banks on some 5 trillion euros worth of deposits it created via massive bond purchases and cheap loans. So what's happening with the ECB is they're having to pay significant amounts of interest payments to commercial banks. So you can see every central bank has a different problem, but all of them are essentially rendering them insolvent. Yes, the central banks are becoming insolvent. Now, what does that even mean? Well, we're going to talk about it towards the end of the show, so stick around for that. It says here the stimulus tools deployed over 7 years when inflation was low were now likely to push the ECB and some of its shareholders, and get this, such as the central banks of Germany, the Netherlands, Belgium, all into the red. Yes, all of the great central banks of Europe are going into the red. This might eventually force some of these central banks to seek a bailout, and would raise questions about their independence and raise the ire of taxpayers. So you can see what's coming already. What is happening in the UK, where the taxpayers are having to bail out the central bank, that is coming to every country on planet Earth at a time of record high inflation, going into the greatest depression in human history. And it says, ironically, the central banks of the most fiscally prudent countries will be the hardest hit because they warehouse a larger share of bank deposits, and the bonds they bought on the ECB's behalf yield 0 or less. 0 or less. That means negative yielding bonds. And if we go over to Hungary, what do we have here? Hungary moves to shield budget from mounting central bank losses. Yes, Hungary's government seek to change the rules that would force it to quickly recapitalize the country's central bank as it accumulates huge losses. So what's happening in Hungary is they're changing the law, they're changing the legislation. That means they have more debt than they do equity. So it's similar to what we're going to see when the housing crisis really kicks in. Once this financial system starts to come down, we're going to see lots and lots of people in negative equity. That means they have more debt than they have equity. So it can be 120%, 150%, 200%. Well, that's exactly what's happening with the central banks right now. And this all stems from 2008 when we had the GFC, and all of that debt, what we used to bail out the banks, we took all of that debt and we passed it up to the governments, to the sovereign level. And of course, then the central banks were capitalizing the treasuries of the governments. And then the central bank took on that debt too because it got a load of shitty bonds. And that's where we are now. So basically the whole system is insolvent from top all the way to bottom. But what they're going to try and do is suck that wealth up from the lowest level, and that's us, that's me and you. They're going to suck that wealth up to recapitalize the central banks, to bail out the commercial banks. That's what they're setting up for, and that's what the legislation being put into place right now in places like Hungary is all about. Now remember, the central bank is the one who prints the money for the government, so it doesn't make sense. This is about bringing down the entire system, but before they do that, they're going to suck up any leftover wealth from any person that is still within the system. Bank of Canada posts first quarterly loss in its history. Yes, here's another one. The Bank of Canada, 385.5 million in the last quarter. Its first ever quarterly loss since its foundation in 1935. Okay, on to the next one. Australia's central bank has equity wiped out by billions in bond losses. Yes, the entire equity of the Australian central bank is gone. It's been wiped out. So again, this is unheard of. Unprecedented things are taking place. The central banks are now officially bankrupt. Now, of course, the central bank can bail itself out because they are the only ones with license to print money. And therefore, what that means is the central bank can always print enough notes to cover its own debt. It can print enough notes to cover everybody's debt. We've seen hyperinflations in thousands of currencies. We saw it in Weimar, Germany, and now we're getting to the point where it's going to happen across the West. It's going to happen because the central banks are insolvent. So who gives the money to the central bank? Nobody, because there is no authority above the central bank. Nobody can fix this but the central bank. So what they're going to do is hyperinflate the currency. They're going to print the money. Of course, before they do that, they're going to try and siphon off as much wealth from the public as possible. And why would they want to do that? Well, of course, that's to lock you into a system of dependency so that when the central bank digital currencies arrive, and of course, we're going to have this period in between that, where you're going to be completely dependent on the government. And that's what I'm trying to avoid you falling into by telling you this information. Now, you don't have to believe what I'm saying. You might say, no, this is nonsense. That would never happen. However, what you better believe is the facts. The facts are Australia's central bank has had all of its equity wiped out. Hungary, for a fact, is changing its legislation to ensure the government bails it out. For a fact, the Bank of England is being bailed out by taxpayers. How long can this go on for? Not very long, because we've already got high inflation. So just do the maths in your own head. Just think this one through. Okay, now on to the granddaddy of them all, the Federal Reserve. Yes, higher interest rates fuel losses at the Federal Reserve. So even the Fed is now going into the red. And it says here, the Federal Reserve's aggressive interest rate rises to fight inflation are leading the central bank to do something it has never consistently done before: lose money. The central bank's operating losses have increased in recent weeks because the interest it is paying banks and money market funds to keep money at the Fed now exceeds the income it earns on the $8.3 trillion in treasury and mortgage-backed securities that it accumulated during bond buying stimulus programs over the past 14 years. Now, do you remember after 2008 when they said everything's fine, we're going to do quantitative easing, it's not going to lead to inflation, there's going to be no problems? Do you remember that? The biggest lie ever told in central banking. Well, of course, we are now paying the piper, and it turns out there are huge consequences for that. Not least have we seen the massive asset price bubbles. They are now deflating, and we're seeing people get wiped out left, right, and center. We've also seen huge corruption. I'm not even going to get into that in today's video, but huge corruption as the existing elites and the parasitic class try and extract what wealth is remaining in the system. That's taking place globally right now. They're getting themselves ready for the collapse. But also now we are seeing huge inflation, and we're seeing the little guy get wiped out. So where does this all end, everyone? Well, I can tell you where it ends. It's going to end with a wave of insolvency at every single level of the fiat Ponzi scheme. You can see I've got Exeter's pyramid here. We've got derivatives and unfunded liabilities at 2 to 4 quadrillion. 2 to 4 quadrillion. That is going to explode. There is no way to fix that. There's no way to iron that one out. You cannot take that to a new system. At some point, that has to go. And of course, that is at the top of the pyramid. So when that goes, it crushes every single level beneath it. Second to that, we've got 300 trillion. And that is anyone or anything that cannot pay debt. Now, that is global debt, 300 trillion. And of course, all money in existence, there's only 40 trillion in notes or 90 trillion in broad money. So you cannot pay 300 trillion with 90 trillion. That is a Ponzi scheme. It's impossible to do. You've also got the share of global debt per person at $38,125. Global household debt to income ratio, 132.7%. Everybody is already insolvent. Now, when I showed my video on Exeter's pyramid, and I highly suggest you go back and check that out, but when I showed that, I said that this can collapse and eventually we get to the point where we get to the central banks and they can backstop the system. However, as I have already shown in today's video, the central banks are also insolvent. That means the whole system is insolvent. So the only way to stop this now is to hyperinflate the currencies, to sacrifice the currencies. The central banks are asking to be bailed out by the sovereigns. So that's by the governments. However, the central banks fund the government. So you can see we're in a death spiral. So what the banks and the governments are doing is saying, right, we'll take the money from the taxpayers, thereby impoverishing them. But once all that money is being taken from you and I, where does the rest of the money come from? Because they're still going to be bankrupt. Where does it come from? There is nowhere for it to come from because the central bank is the one who prints the money. So the only thing that can happen, the only way governments can continue to function is for the money to be hyperinflated. And that just kicks the can down the road a little bit further. So we're going to get to this stage that you can see on Exeter's pyramid where we get to paper currency. You can see it says 40 trillion. There's 40 trillion in paper currency, but it can go to infinity. So if you want to understand how do you fix 2 to 4 quadrillion in derivatives, how do you fix 300 trillion in global debt? Well, that's how. You just print the currencies, you just print the money. We have seen this throughout history. We saw this in John Law's France. We saw this in revolutionary France. We saw this in Weimar Germany. We've seen it across the globe hundreds and hundreds of times. We've seen hyperinflations, recent ones. We saw in Zimbabwe. We've seen it in Venezuela. We saw it in Poland. We saw it in Hungary. We've seen them everywhere. That's what's going to happen. And if you look at it as I have just laid it out, there is no other way to fix it. If anybody can tell me how they fix this without destroying the current system or hyperinflating the currency, then please let me know in the comments section. So how do we solve this, everyone? How do we protect ourselves? Well, you have to get out this system. You can see what is happening. They're setting it up now to come down. This is the final stages. We're coming to the global financial collapse. They're going to have to reset the global monetary system. There is no way to fix it. No way to fix it. So how do you save yourselves? Well, let's look to the bottom of this chart here that I made. It says actual planetary wealth. So what you need to do to protect yourself from the collapse of paper wealth, from fiat money, from Ponzi scheme wealth, what you have to do is you have to get into real assets with zero counterparty risk. Because if you have assets that have counterparty risks, you are going to be in trouble. You're going to get sucked into this black hole, this debt collapse when it happens. So for every human being on planet Earth, there is literally 1/4 of an ounce of gold. That's all there is per person. So if you get yourself that much wealth, if you get yourself just 1/4 of an ounce, you actually have your global share. So this is one thing to think about. It doesn't take a lot if gold is going to be used in the new financial system. Remember that video that I did on the Dutch central bank? Yes, they are insolvent also. Well, they're talking already about using gold to recapitalize the central banks. So just 0.31 ounces is your global share. Now, of course, if you can get more than the global share, that would be fantastic for you. Above ground silver per person, 0.5 ounces. So half an ounce of silver is the global share per person. Amount of farmland per person, 1.5 acres. Again, if you could get yourself 1.5 acres, you can live self-sufficiently. You can grow food there. You can get some off-grid energy. You can dig yourself a well and you can survive whatever happens next. So there you have it, everyone. They have already pre-warned us about what comes next, and that is not good for you or I. It's not good for taxpayers. We are going to have our money raided first and foremost so that we can recapitalize the central banks. They're going to steal the wealth from the taxpayers and force governments to take that money from you or I and pass it on to the central bank. Now, this is exactly what the monarchs used to do when the monarchs needed to pay for their infinite wars because the bankers kept pushing them to get into wars. Where did that money come from? It came from the citizens, and it led to things like the Peasants' Revolt, because you can only tax people so much. We've seen this many times in history. If you push people too far, if they can't afford their heating bills, if they can't afford their food, that's a big one. If they can't afford the bread, what they need to survive, then what happens? You have big revolts. So we're going to enter a period of meta instability. This is all ahead of us. Now, if you'd like to join a like-minded community who are actually thinking about these things and putting real actionable steps in place, then please come across to my Patreon and you can find us there. We have a private Telegram group, and I also do an Audible newsletter every week or so in which we talk about what we're doing over here on the farm. And of course, we look at any key developments as this unfolds. Now, that's going to be really important as this really starts to hot up. Like I said, this episode today will hopefully have give you just an idea of how bad things now truly are. When the central banks say that they are failing, there is nowhere else to go. The only thing you can do is print the money. And you better believe it, they are going to print that money to oblivion. Now, if you'd like to hear more about what is going on, you can check out my recent interviews. This week, I was interviewed live with Rick Munn on TNT Radio. I had a fantastic chat with Rick, as I always do, and we spoke about how we stop ourselves from feeling overwhelmed during difficult times. And we also spoke about cryptocurrencies, and I gave my take on the crypto meltdown. So you can watch that or listen to that. The link will be in the description. Also, I had an interview last night with the great Monica Perez, and we did a deep dive on all of this content that I'm talking about. So we actually went really deep on the new monetary system, on the global financial reset, on World War III, on BRICS versus the US, and many, many other topics also. So again, I'm going to put that in the description. And if you want to find out more about my views on these topics, that's a really good place to go to check it out. Thank you so much for watching. I hope you have a fantastic week, and I will see you in the next one.
I mean, that pretty much is the end of what you're, that's the fact, right? Like, this is what you expect from the currency. The currency collapse is going to be the end of this system. I assume you expect us to move into the CBDC as like the new dollar. Like when this happens in South American stuff, when they abandon a currency, they'll roll out the new peso. They'll roll out the new whatever. So the CBDC, I assume, will be the new dollar, right?
Yeah,
After
that's what I believe they're trying to get to right now, Monica. However, they're nowhere close to it. I know there's a lot of discussion around it. They're doing experiments in many different countries. So the Bahamas has had a CBDC called the Sand Dollar. Nigeria had a CBDC. So they're experimenting. And make no mistake, when we look to the Bahamas, they haven't chosen to do that. They've been chosen to be a test subject. That's how it's happening. Same in Nigeria. But the Bahamians have no desire for a CBDC. They're a tiny island with a tiny economy. So it's really just a test run. And that's what they're doing across the world right now. But they're a long way away from it. And the problem the US and the West in general has is the system's so fragile, it's threatening to collapse at any moment. So there's this gap here now, this integrum, where what's going to happen if it comes down and we can't fix it? We can't just print the money because it hyperinflates and then we have a domino effect of hyperinflations. What do we do then? So then you'll have this period of chaos. And what will happen there if you wake up and you're told that your pension's gone? What's going to happen if you can't draw money out of the bank because the money's worthless? Remember, in Europe, in the US, and in Canada, they've already set up for bank bail-ins. So that means if the banking system starts to collapse, they're going to take it from the depositees. So that's already actually been written in. That came in after 2008. So after the European banking crisis, they did this in Cyprus, and they're doing it right now in Lebanon. They're taking the money from the depositors' accounts, and they're saying, right, we're going to take that money and bail out the bank, and we're going to give you some worthless fiat currency that's being hyperinflated. So essentially, you're getting like a 99% haircut on your deposits. So this is already all in legislation. So what's going to happen in that world if people wake up and they can't access the bank? Supply chains are breaking down because nobody can pay one another because the money's worthless. So how do the suppliers pay the wholesalers? How does the wholesaler pay their workers? Everything ceases to work. So then you've got a real civilization collapse type moment. And what you'll need in that kind of environment is the government to step in and control everything. So they'll lock people down. They'll have QR codes, what you can go and get some rations. It'll be a real nightmare dystopia. However, if you look at what happened in 2020 and 2021, they basically did a test run of what that world would look like. Everyone was dependent on the government. All shops were closed. You could go to the supermarket. However, I don't know what it was like where you was, Monica, but in the UK, you was limited to buying 3 goods. You basically would just expand out a little bit further and it would look somewhat similar. So in my opinion, they're already doing a test run for this ultimate crisis, which will be the financial one. Now, like I said, their goal is to get to CBDCs fast, to kick the can down the road long enough to be able to do some kind of controlled demolition and some kind of smooth changeover. However, you will still have to destroy what currently exists because you can't take 4 quadrillion of debt of derivatives across to a new system. You can't take 300 trillion of debt across to the new system or 40 trillion in unfunded liabilities. Do you see what I mean?
Yeah.
And because we live in a global system, you've got all of these other countries as well. So they're not going to accept, for example, if you're Chile, you're not going to accept worthless fiat money for your copper. You're going to, whoa, wait a minute. I'm keeping my copper because that's worth something. So it's not just a case of trading the old system for a new system. It's also a case of having a new, coming together and designing a new system that people are going to want to participate in. Now, at present, the US gets to enforce its will because of the dollar. So people have to give the US stuff and it can give them worthless dollar because they need that to pay for commodities. And there's also a lot of dollar denominated debt. But you think about it, Monica, if this current system comes down, The US no longer has that ace card up its sleeve. It can't do that. So then all of a sudden, countries have to start putting up things of value again to trade with one another. It won't go back to being a fiat standard, is my point. So then you've got to have some whole discussion, and somebody has to lead that. You know, post World War II, it was the US, but in this new system, who's going to be the leader? And that's why World War III comes in. It's setting up for deciding who's going to rule the next system.
You kind of blew my mind there for a second.